So when I describe the investment story for the Nemetschek Group, I typically would start by highlighting the low level of digitalization in our broader context of the construction industry. This truly is our opportunity today and going forward. As one of the leading suppliers or software vendors for the what we call AECO, architecture, engineering, construction, and operations industry, we are a pure software play. The Nemetschek Group does focus on the AECO. We don't do any software for manufacturing or industry-related manners elsewhere. And I think that's an advantage. That's, by the way, also a differentiating factor to the competitors in our landscape. We have structural long-term growth drivers, and they even get additional help by regulation that has a vast interest from governments, for example, to have construction projects run in more time, in the budget, less overruns, and also less resources. And the aspect of sustainability comes in play big time. We, as Nemetschek Group, have a wide spread of customers, such as architects, engineers, construction companies, facility managers, asset managers, property. So the prop tech and construction tech, that's our space. With leading edge products, we serve a technology that does address the pain points of those customers, be it the design, be it the pure build phase, or then the manage and operate of buildings. It's a complex material, and that's why the entry hurdles are relatively high, and there hasn't been any substantial newcomer in the last 10 years. We are the leading firm for what we call the open BIM standard, so open data standards. And with a large and broad customer base, we're not depending on a single region, for example, or a single customer type. There's a high stickiness of customers, high entry barriers. And by the way, if we look at the last 18 months, we've also gotten through the pandemic quite well because of the resilience of the business model. In summary, I think Nemetschek is known for a growth story, and the high level of profitability that historically we would have set 27, 29% EBITDA with a high single digit growth, that is the pattern that we have shown that we can do and that we will continue to serve. The high share of recurring revenues of over 60% gives us a solid financial position, and it also allows some M&A in addition. So altogether, you see the three segments that the organization serves: plan, build, and operate, and a circle of pain points or use cases with the various brands that have a very strong reputation and brand awareness in our market. The long-term anchor shareholder, Professor Nemetschek, and his family hold more than 50%. They give us stability, and we're all focused on a long-term value generation. And if you're interested to learn more, we're happy to share more details. Get in touch with the Investor Rel team. Thank you very much.
Hi there. Since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.